Check, please.
Hey, welcome back to Everything Money. One of the most highly controversial topics we talk about on our show for the past 3 years has been Tesla, this amazing car company. This is a car company that I own. Mo owns one. I've had 2 Teslas. Paul, you have one on order. We love the product, not so much the stock price, and people have argued with this relentlessly. We're going to go over today's Tesla's fourth quarter earnings. We're going to bring you some numbers and Paul's thoughts as a successful value investor on this amazing company that we certainly think is overpriced. But if you'd like to hear us out, I'm going to bring Paul some arguments that some of our fans have been bringing to us as well. So Paul, take it away on Tesla and their earnings.
Thank you, Seth. Guys, first off, 2 things I need you to do very quickly. Follow us on Instagram, Everything Money Investing, and follow our 3 personal accounts. It helps us feel really good about ourselves. So Tesla. This is going to go down as the fanboy of the 2016 to 2022 market bubble, or however long it lasts. This is it. Like, I get more young, inexperienced people telling me what I'm missing and not once bringing up metrics that actually work over a long period of time. This is the one.
Who also don't own the product or have ever used it.
Yeah, that doesn't bother me so much.
Oh, okay. I just thought that's always so weird.
Yeah, it doesn't matter to me. If somebody,
no one's actually driving them.
If somebody had a dildo company that I don't use, I'm still going to be able to evaluate it.
But
right?
there are companies you do use. Keep going.
Yes, correct. Gary Mashuris, good friend, manages a small amount of money for me, but also he just wrote his annual report. And in it, he brought up his article about he teaches a value investing class, a kid in his class who chose to take a value investing class, wrote him an email after he talked about Tesla, where he wrote a long email explaining to Gary how he was missing it on Tesla, but didn't bring up any reasonable valuation metrics, just said, it's the technology, it's the future, it's all this. This is going to be the epitome of, I think, what's going to end up being a major, oh my God, you remember Tesla fell 90%. Okay, now I want to bring up some examples here. Let's go to our 8 pillars software. There's 2 companies I'm going to talk about, Intel and Cisco. These were the fanboy companies of 2000, the tech boom of 2000. You could not miss on Intel buying it here.
In fact, that was going to be the first $1 trillion company 22 years ago.
I thought that was Cisco.
Cisco, sorry, I thought you were Cisco. My apologies.
Guys, that was 22 years ago. It has not touched that price since. At the end of the day, in the long run, what matters is what's behind the company. Let's go to Cisco. This was the company that you can go Google articles about people saying this is going to be the first $1 trillion company. Look at Cisco. Has not touched that price since 2000. And guys, they're even around still. You don't even know all the companies that didn't even stick around. I do think Tesla will be around 20 years from now. I do think they don't spend any money on marketing, but people still love them. Great experience in the car. I love being in Seth's Tesla. I love being in the back seat of Seth's Tesla with Seth.
Yes.
And all these things.
Steamy.
And guess what?
Steamy.
Something's going to happen. Tesla's going to fall big time. If you think I'm wrong, okay, it hasn't fallen yet. I get that. But if there's 100 Tesla investments with exactly the same parameters, you're going to lose a lot of money at some point. I'm sorry to say that, but it's just, this is a car company. For people who say it's not a car company, what is it then? A software business? How much is their revenue from software? What's the revenue from software? Tell me. That's the thing. It's a car business. And guess what? Every car company in the world is doing EV now. Bentley just announced they want to be 100% EV by a certain date. Bentley. Guys, Bentley. Ferrari will be 100% EV at some point. All these big macho car companies that are all big on, I got a 12-cylinder, they're all going to be EV at some point. Now, does Tesla have great technology in their car? Absolutely. Do they have great software in their car? Absolutely. But until they're generating money purely from the software, and Mo brought up a good point. Mo said Peloton is more of a software business than Tesla because Peloton, you can sell, you can buy the software and apply it to other areas of.
That burned a lot of people's asses because, Mo said you can at least take the Peloton app and go wherever you want and use it.
And on a different device. You don't have to have it on a Peloton bike. You can use it on another bike.
And people say you're nuts for that.
We're nuts.
There is some semantics, Paul, where the concept of, so the fans of this, they definitely use the concept that this is a software company.
All right. So you know why they say that, Seth? Just like in 2000, technology companies can generate income so much faster. They can change so much faster. That's why they were justified. They're changing the world. It's whatever excuse you need to justify your values. Now, there will be a time when Tesla's stock is falling precipitously like crazy. The company revenue is going up, profits going up, and they'll be saying why it's going to end because people react to the stock price, not to the fundamentals. That's all that's going to happen. That's all. It's just like Microsoft in 2011 and 12. It's a dead company, Paul. If they're dead, why is their revenue going up 8% a year and their profits going up 11% a year in, year out? How is that dead? How is that? That's like telling me, Paul, you have a heart problem and I have no cholesterol, which is not possible. It doesn't make any sense whatsoever. So let's go look at our company through the 8 pillars in our software.
Yeah, people say we avoid the facts, Paul. So, for example, let's just get after some so I can fill you in. So they made 300,000 cars in quarter 4. They had their best year, 0.94 million cars.
There's a lot of companies that are going to have their best year and they're still overpriced, and that's Tesla.
Up 87%.
No, by the way, I'm not missing the facts. You're missing the interpretation. We're disconnecting on the interpretation of the facts. Like if I said to you right now, you're an idiot. Some of you will be so pissed at me that you'll write me letters and you'll sit there and probably put me on some hit list. Others of you laugh about it. It's all our reaction to what we see. You interpret those facts of record years and say, guys, remember, they still make 1/10 the cars that every other manufacturer out there makes, whatever the number is. And they're worth 20 times those manufacturers, 10 times those manufacturers. That's the fact you are missing. You are just focusing on your fact. Tesla is going to be one of the biggest car companies in the world, I truly believe. That doesn't mean I pay $1 trillion for the company.
Well, I do like the concept, Paul. We laugh sometimes. You take things to extreme, whether it's jokes or insulting people or looking at numbers. And you do say something like, okay, so Tesla was at $1,200, $900. It's been split a couple times, but why not pay $4,000 for it? Or why not the market cap? The market cap's $1 trillion. Why not pay $3? When does it stop? And at that point, this is where you have to sort of bring in the numbers. So there's this dichotomy, Paul. The people overlook numbers when they talk about what's coming ahead. The robots.
I guarantee, Seth, if I'd said at $100 a share, which I was saying, hey, what about at $1,000? Is that too much? I guarantee a lot of Tesla fanboys out there right now would have been like, no, that's too much. But now that it's there, it's justifiable. Just like if Tesla went to $3,000 a share, right now, if I sat there and said $3,000 a share, you'd be like, no, that's too much. But if it got there, you would figure out a way to justify $3,000 a share.
Oh, is that how it goes?
100% is how it goes. It goes every single time that way. We just figure out a way to justify our criteria, our assessment of something. The same can be said about me, right? Well, Paul, fine. The difference is mine's very consistent. You tell me, I love Microsoft as a company. I hated the current stock price. Make it $100 a share. Oh my lordy. All day long. Alibaba. I didn't buy Alibaba not because it was overpriced, because I didn't trust China and the numbers. Charlie Munger trusted China and the numbers. I was all in. I'm like, great. I trusted. Same company, but I got a different interpretation of the fact of the data out there. Okay, great. But what you're doing is you're not interpreting the data correctly. And you might end up being right on this one by pure luck, which will be the worst thing that happens to you.
Yeah.
Because being right one time, it's like the gambler who hits it big. Oh, see, I knew it. Gambling's awesome. I'm so good at this. And it caused them how many losses along the way?
Yeah, this is the guy that after the flop comes out says I should have held on to 2-4.
Yeah.
Because a full house
and 2-4 will win every so often. But at the end of the day, 2-4 will beat pocket aces every so often. At the end of the day, though, I'd rather have pocket aces every single time.
And that's what you'd like to bet on, the kings and aces, right?
I bet on 2s and 4s.
Oh, that's right. Okay, sorry.
All right, so let's go to our 8 pillars tool, guys. So let's go to 8 pillars, Tesla, and there'll be more about the 8 pillars. What we're starting to do now on our software and videos is we're not going through every single individual step. There'll be more on that at the end of the video on how you can get the 8 pillars information. To get more of an understanding of the 8 pillars, we're just going to go through it now. All right, guys, so this is our 8 pillars. First things I'm going to do, I always look at market cap and dividends. $900 billion market cap, no dividend. Not a shock. By the way, look at the free cash flow. In the last 12 months, it did $2.6 billion in free cash flow. The last 5-year average was negative $222 million. Okay, so going to the 8 pillars tab. That's a lot of red, guys. All right. 5-year PE is NA and 5-year free cash flow is NA because they had negative over the last 5 years. Shares outstanding. Guys, this is a silent killer. They've increased their shares outstanding by 28.7%. There are two ways to finance a business: debt and equity. They've done a lot through equity, issuing shares. That's diluting you as an owner. You are getting a smaller and smaller piece of the company. If a company has 10 shares outstanding, you own one of them. You own 10% of the business. If they issue 2 more shares, you now own 1 out of 12 shares, 8.33%. You went from 10% to 8.33. They've increased their shares from 10 to 12 to 12.9. So you're diluted about 30%. They have cash flow growth, which I certainly hope so. Revenue growth is huge, and net income growth is huge. Those are very good positives, guys. But at the end of the day, you can overpay for growth. Why not $100 trillion then if they're going to be the best car company in the world? You might sit there and say, Paul, it's ridiculous. I don't think it's that much more ridiculous. I know it sounds insane to say. That's not much more ridiculous. It's still an insane amount of money. Look at this. Biggest ratio. Price to sales ratio, 19. Let's say hypothetically it's a software business. Price to sales is a very common metric. Let's look at some software businesses and see how their price to sales ratio is. Microsoft, remember, still an overpriced market. 12.6 versus 19 for Tesla. Okay. And by the way, Microsoft's margin, 68.8%, bottom line of 38%. They make more to the bottom line after taxes than Tesla makes per car. Think about that for a second. After all their overhead, everything's paid for, Microsoft makes more money as a percentage of their revenue than Tesla makes on per car before any of their overhead, any of their salaries, and anything like that. So, Microsoft. Let's go to Google. What's their 8.3 times sales? Also, 30% bottom line profit margin. Tesla's at 23% gross margin before paying all the overhead. This is what I'm saying, guys. You want to talk about I'm missing the facts? Please, if you really think I'm missing the facts here and I'm not getting it, I am begging you. I'm absolutely begging you. Sell your Tesla stock. Donate the money to some charity. It'll do much more in the world than the money you're going to lose along the way. At least get the tax write-off. Please do it. You are absolutely stupid if you believe that I'm missing the facts on this.
What was that? If you believe, not just a Tesla investor.
Yeah, if you believe this. You're absolutely stupid, and I feel bad for you. Please write everything bad about me down below, because when it does come down, I am going to look at you on YouTube and say, you deserve to be broke. I'm so glad you are broke and poor, because you should not have money. You are the exact opposite of having, you are allergic to money. You have no idea what you're doing. And I wish awful things upon you financially, because that's how you will learn.
That's how you will learn. Right. Paul, break it down to just, my 11-year-old will not wake up for school. We got him a brand new alarm and he turns it off.
Yeah.
And I said, tomorrow, it's your life. It's your life. You wake up, you get dressed. I'm not going to drive you to school in that Tesla. You got to walk your ass down in the cold to the bus. And he's gotta learn, because we've been coddling him forever to the point where his whole delivery, we wake him up, I sponge bathe him, I'm just joking, and then we hand deliver to him in a warm Tesla to school. I'm like, at some point I look at my wife, the coddling, my wife who coddles them as much as I do. It's like, it's your life.
What did he say?
Well, he got up today. Well, I'll keep you. But that's right, Paul. It sounds harsh, but we're not gonna learn.
I say it in a very harsh way.
Yes.
Warren Buffett would say it more like, listen, at the end of the day, you buy pride, blah, 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 and sometime in the future, maybe you'll learn a lesson here, but it'll be great for you, me. No, you don't deserve to have money. You're stupid. You are stupid. You are absolutely stupid. And I hope to God, I pray to the Lord, Jesus Christ, my Savior above, that you lose lots of money.
Because at that point, when this system works of following fandom, which it has been, Paul, I'm wrong. I was going to say entire YouTube channels. The most successful financial YouTubers made a huge bet after an okay life. I'm learning more and more facts. They made a bet on Tesla, and now they're experts because they made it.
Yep.
They caught one big fish, and now they're the best fishermen in the world.
Let's go to the stock analyzer tool, Seth, because I want to show how ridiculous this is. But it won't matter. If you believe that I'm wrong still, I could literally have Jesus Christ come down here and tell you you're wrong, and you're not going to believe it. But let's go to our stock analyzer tool. This has been so popular with our users, and more on the software in a little bit about how you can get it, because it tells people we don't know the future, but we know every investment the present value of all future cash flow. Or as you morons who think out there who like Tesla and think it's reasonably priced, every investment is just what your 18-year-old neighbor's son, this 18-year-old son of your neighbor, says about Tesla, because he's obviously right.
But Paul, they're gonna do.
He just lost to Virginia last week.
They're gonna do the 25K car. Oh wait, I'm sorry. They're pausing that. The truck, no, they're not doing that either. The Roadster, they can't make that. But they're gonna make the robots. That's all coming. And full self-driving is gonna be better than humans.
For the record, I love Teslas. I love Seth Tesla. I love Elon Musk. I just hate the value.
The value. It's just a value.
So if Tesla's around for 10 years, I think it will be. Let's do some revenue growth numbers. Look at this, 90% over the last 10 years because they were nothing 10 years ago. Let's do 20, 30, and 40%. Profit margin, 6, 8, and 10. By the way, no, I think there's only one car company with 10% profit margin. But, I'm sorry, software business, I forgot. Free cash flow, I'm going to do the same thing, 6, 8, and 10. PE, this is where everybody's going to argue with me. I'm going to go insane. I'm going to go 20, 30, and 40. And you might think I'm insanely low for that. God, I hope awful things happen to you.
Now, I'm seeing this, Paul, and you have to digest this for me, or at least explain it to me, of course. Automotive gross margin of 30.6%.
Automotive gross margin? That's good.
Automotive gross margin of 30.6%. This pushes them past being just a car.
No, it doesn't.
Operating margin of 14.7.
Sick. Go look at the software business out there that are software businesses. Their gross margins are 70%, 80%, not 30. What is Tesla's software margin? This is a trick question, folks.
Oh.
There is no software margin. They don't sell software. They are not a software business. Stop with this. This is exactly the point. You morons.
Oh, they don't sell software.
They don't sell software. They sell awesome cars and really shitty solar panels. I mean, I don't know if they're shitty or not, but I heard good things about them. They don't sell software. They're not a software business. God, you guys are so stupid if you really believe this. I'm sorry, you are stupid. You know, my friend Gary would be like, well, you know, all the... By the way, Manish Prabrai in our interview was kind of like, listen, I don't know if Tesla's that overpriced. Sorry, Manish, I disagree wholeheartedly. It's insanely overpriced. No, I agree with you wholeheartedly. It's not just a little overpriced, it's insanely overpriced. God, this is going to go down really bad if this company becomes a $10 trillion company.
Well, that's not really the point. I mean, I guess I have to say myself, it's not the point. It's like if you take this same process of investing and keep applying it over and over, that's why when Paul says, if you took 100 Teslas, if you keep this overvaluation process, you look at the numbers and then not so much, and then ignore the numbers on future possibilities. At no point have I ever, I see a lot of Tesla videos of the fanboys and they just, at no point are they not going to make the robots. It's the robots are happening, or the cars are happening, even when they literally announced that they're not going to make.
By the way, when Elon Musk in the last 5 years said they were 2 weeks away from bankruptcy 2 or 3 times.
Well, I think we're far away from that at
we
this
are,
point.
But the whole point is like, guys, you guys didn't realize that back then. And you guys are still touting the stock. You were touting the stock before he even said that.
That's right.
And he literally said we were 2 weeks away from bankruptcy at least twice.
So I owned 140 shares of Tesla at one point of a company that was literally admitting they were almost bankrupt.
Yes, twice within 2 weeks. They were like, Elon Musk literally said we were 2 weeks away from bankruptcy. I think was it twice or 3 times?
Twice.
It was at least twice. I'm only saying all this not to be a jerk, not to hate on you. I'm just sitting there saying we look at investments. There's processes. And the best investors of all time, their biggest errors are from omission, which means they missed something because it didn't make sense to them. But that same omission avoided how many strikeouts? That same omission, they're not going to hit the grand slam, but they're going to get a lot of singles, doubles, and triples. I'm okay missing the grand slam home run because you know what? I'm also the guy that knew that I had to strike out 20 times in order to get that grand slam. And instead of striking out 20 times, they're going to get on base. The Buffalo Bills were probably one of the best teams of the 90s, if not the best team, but they lost 4 Super Bowls in a row. So the question you have to ask yourself is, those people, same argument made with LeBron James. Oh, he lost so many finals. Yeah, but he got to 1 billion finals. So I'm looking at saying I'm okay missing out on the Tesla, but I will tell you this. If you value every company, if you look at every company the way you look at Tesla, which is about hype and all this stuff, you will lose a lot of money.
Let me show you some numbers here I finally found, because sometimes it's kind of hard. So in 2021, Tesla will likely sell about 100K full self-driving upgrades. So that let's wrap our minds around this. They made 1 million cars. So I guess they're saying 10% are going to upgrade to the $10,000 package, which just got raised to $12,000. So in my Tesla app, I can go and just buy it right now.
Yeah.
I can upgrade my car. They flip a switch and now I'm full self-driving, or at least beta mode. Now this has been falling of late. So apparently in 2019, 37% of people got full self-driving. It's now down to, as they say, they're expecting 12 and 10%. So Tesla could sell about $1 billion worth of full self-driving software this year.
One-time payment.
Is that a lot of money? $1 billion
I mean, it's 3%
software?
of their revenue, 2.5% of their revenue.
Oh, that's it?
Yeah, they did 40 billion. What are they doing in revenue?
Uh-oh.
Great. Congratulations. You're a software business because 2.5% of your
46.
revenue came from software. Yippee.
Why
That's like, you know what that's like?
Why
You know what that's like? Is there protein in M&Ms? There's some junk food out there with protein in it. That's like you saying, oh, I'm eating protein. No, you're eating junk. You're eating junk. Yes, it has protein in it, but if it's 1 gram out of 50, you're eating junk. If 49 grams out of 50 is fat and carbs and 1 gram is protein, are you calling it a protein? If you are, you are stupid.
They're actually saying that self-driving software sales are declining every year. You said that about 2% of Tesla's total revenue. Damn, Paul, I actually thought you were wrong. But I mean, like,
oh, come on. Come on, Seth.
2%?
You thought I was wrong. It's adorable.
I mean, I'm trying to make you wrong.
I know. Listen, I'm going to be wrong a lot. I'm being funny about it.
I'm trying to play the normal person who's in our Everything Money chat saying
they don't even break down.
Paul's wrong.
So did they break it down in their... So the reason I said the statement about they don't break down the software because they don't sell software, they do sell software. I know that. But it's not a huge chunk. It's literally like such an inconsequential amount.
They don't sell the software. I mean, at the moment, they don't sell the software outside of the product. So that's like saying...
Okay, yes, but I was even meaning it in general. Like, I don't even see the break. Like, when they announce their earnings, they don't sit there and go, hey, great news, we sold $300 million in software upgrades. It's like, oh, okay. And by the way, to your point, with the point we were trying to make earlier, is you have to have their car in order to buy their software. So it's like saying that my Nautilus machine is a software business because I have to buy their software to get to use the Nautilus. Well, okay, I can use the car without the software. I can use the Nautilus machine without software. Therefore, to me, it's driven by the machine. It's driven by the car. The car is what drives the sales, not the software. The software is an add-on. It makes it a non-software business.
You have to have the car to have the software.
Correct.
How is this not a car company? I don't understand.
I don't know. What percentage of the revenue comes from the solar shingles? Probably more than software. So in your argument is they're a roofing company.
I mean, the full self-driving, I said I finally met one person who paid for full self-driving.
Who?
Some random guy at a charger. And his funny part was he immediately told me how it seemed like he was just a show off. He immediately told me that he paid $140 for this car. It's a very strange interaction. He just got out and said, hey, I like your Y. Yeah, I love your X or your S. Yeah, I paid $140 for it. Got the full self-driving. I was like, I've never met someone who got the full self-driving. Because in the end, I have seen a decline in performance with this software in my car. And those
it's still way better. Like I have a Taycan EV. Oh, I mean, the software is just junk.
Yeah.
It's terrible.
Same thing in a Honda.
Yeah, it's just terrible. I don't care. I like the EV part of it. I love the car. Okay.
Damn, I'm trying to stump you on this. Damn.
Can we end this really long video that's about
2%.
that we do every month where we talk about how stupid Tesla fanboys are and they still argue about it?
Well, the new quarter came out and I was like,
huge.
This will get you, Paul. You're gonna eat your words on this.
$17 billion in revenue, $2.3 billion in profit for bottom line profit of what is that? 13, 14%.
14.7.
Sick. Software business, Microsoft does 40%. Tesla does 14. Sick.
But it keeps going up, Paul.
Yeah, it keeps going up. It could very well go up forever. It probably will go up forever. And guess what? You can still overpay for it. This iPhone's a phenomenal iPhone. It's a screaming deal at $1. It's a terrible deal at $10,000. You're paying $100,000 for this iPhone if you're trying to compare it to Tesla. Okay.
Yeah.
Not $100,000, but call it. You're paying the equivalent of $15,000 for this iPhone. It's a $1,000 iPhone. Great. What are you doing?
I mean, this is the hill you're going to die on, baby. This Tesla.
Listen, it's this whole hill I've been die on. Tesla's been a big one, but it's Bitcoin. It's a lot of the things in this market, and I'm going to be wrong on some of these because, well, actually, maybe not. Because look at the internet age. What internet company didn't fall big time?
All of them.
All of them did. Now they ended up some of them rebounded, but they all fell. Amazon fell 95%. From 2000 peak to 2002.
And the people don't get this comment, Paul.
95% from 113 a share down to 6.
They still say that, yeah, but if I would have bought Amazon, but the point is,
you wouldn't have kept Amazon.
You would have been buying Cisco, Intel, and Amazon
and you would have sold them as they were falling.
Yeah, so it's not about so much the exact company you bought that has since skyrocketed. It is just the process of looking at a company and saying what it's worth. And so you would have bought all the companies that fell 90%, including Amazon, and then got lucky on one. So, Paul, I've gone through a huge stage where I've argued with this about you for years because I used to be that blind sort of believer that Tesla was going to be end all everything.
And it very well could be the be all and end all for car business. It very well could be the number one car. And someday it could be selling for $3,000 a share 20 years from now. And if you swear to Almighty God, if you come to me and say, Paul, look, you were wrong, I will end your life.
Oh, okay. We're going to go full.
Because it's going to go from $1,000 a share to something a lot lower before it goes to $3,000. And even if it goes to $3,000 a share in 20 years, what's that return? 3 to the 0.05. It's a 5.6% annualized return. I can literally make 5.6% in my sleep over a 20-year period. Literally in my sleep. I wouldn't have to get up in the morning. I could literally scratch in the morning and make 5.6% doing nothing. Just betting on which side of my it's the most in the morning.
Paul, people saying Tesla's going to go to $20,000 a share.
Great. So it's going to be a $20 trillion company. The U.S. economy is currently $23 trillion. It's going to be the size of the U.S. economy. That makes sense.
Mm-hmm.
That's people who don't understand value. Not even value investing. You just don't understand value.
What they've really understood is if you talk about Tesla on a lot of videos, you'll get subscribers.
Yep, that's exactly it.
And that can
just
help
like us.
Pay your bills.
Just like us, except we're doing it to bash everybody.
Mm-hmm. All right,
broke losers. I hope you have a great day.
Go easy on us.
You want to tell them about the...
Should we even?
Hey guys, you want to buy our software? If you're one of the people who watch this video and goes, hey, this guy's kind of a prick, but he makes sense, and this software looks pretty interesting, here's how you get it.
If you're drawn to this style of investing, you can have the software behind Paul. Paul, tell them how they get it. Go ahead, baby.
All right, so we created this software because as we were doing this analysis early in our videos, our users were saying, hey, how do I get this data behind you? So we hired 4 or 5 developers, spent hundreds of thousands of dollars and created the software. You get everything you saw here on your mobile phone. It's not just on desktop, it's on your mobile phone, easy access to it. You get everything listed here, 8 pillars, retirement calculator, stock analyzer tool, 8-pillar portfolio, exclusive video content. Every single day, we send out one or two videos to our users. It's only available if you subscribe. And all of these things are coming that you get included. But most importantly, you get the community of over 6,000 members who are there to talk about investing. So many people felt alone in investing because you have these value investing ideas, but you have nobody to talk to about it. This allows everybody to come in. Thousands and thousands of messages are exchanged every single day talking about everybody's investment ideas, even crypto, even Tesla. People on there just agree with me on them. This is all for $1 per day. Less than a cup of coffee, guys. $1 per day. If you can increase your returns by 1 or 2% a year, or Even better, decrease your losses by 1 or 2% a year. This will increase your net worth by hundreds of thousands, if not millions, by the time you retire. This is a no-brainer, guys. $1 per day, all available on your phone. Sign up. 2 ways to sign up: everythingmoney.com or Patreon. The benefit of going directly to everythingmoney.com is there is no sales tax charged yet because we're not big enough. So go sign up. No brainer. Get on it. $1 per day.
And for the 100 people who watch this, we might catch 2 or 3 of you.
Every 100 people. Listen, I come across as arrogant. I come across as, I get it completely. I understand it completely. I'd probably hate me if I were somebody else. But at the end of the day, for me, this is just so obvious, and I'm going to be wrong. I've been wrong for 5 years. Some moron, Tom Nash, says, how does this guy not make money in the last 5 years? Well, Tom, how are you so stupid? You lost 80% of your money on Palantir. I didn't lose 80%.
Zero's better than 8 minus 80.
Yeah, zero's better than minus 80. Thank you very much, moron. Of course it is. And it's going to be a lot worse for you, and I'm so happy. I'm so happy. Luckily, you live in the Ukraine, and you can probably buy a hut there for $4. So that's probably why you're going to be okay over there, moron.
Yeah. Anyone else you'd like to address?
Meet Kevin. Nice hair, dude.
Meet Kevin's having a rough month.
He shaved it now?
Meet Kevin's having a rough month.
Oh, God.
32 million in total portfolio down to 20.
Oh, really? That's weird.
In a month.
I want to be so cocky and say how much I made in the last month.
Then he sold out, which and I guess he's, from my hearing, he's turning off comments. He's a mess. And
yeah, he's an idiot.
Graham Stephan, I think the truest one of them all, has to sit in these stupid shows with them and wince as these idiots.
What about our buddy Stock Mo? How's he doing?
Haven't checked in with him lately, but.
All right, let's wrap this thing up. Guys, if you want to hear more about the 8 pillars, please watch the video below. Instead of us going through a 30-minute video, which we just did.
Yeah.
In order to, it's not 30 minutes after all the edits. Guys, there's a lot more edits that we did. There's a lot more things we cut out that were really exciting, but we're cutting them out because we don't want to get canceled.
Fondle thumbs up, click the subscribe. Argue with Paul in the comments.
Bye.
Bye, guys.